Here with Noricum Gold. Can you introduce yourself, please?
Yes, Greg Kuenzel, CEO of Noricum Gold.
Can you give us a little introduction to your company before I ask you a few questions?
Sure. Noricum Gold's an AIM-listed company. We've been focused for the last 3-4 years on a group of exploration assets in Austria. Mid last year we acquired a new project, a near-term development and production asset in Georgia. I guess 12-18 months ago, as a company, decided to refocus our strategy, and seeing the lack of interest in particularly the exploration market, decided that we'd look to add to our assets by seeking out a project that was further developed. We spent quite a bit of time, looked at a few very good assets, and then in late 2014 we were introduced to the guys in Georgia, and in June, July last year completed the deal.
All right. Right. The first one up is gold production is set to commence this year from your copper gold project in the Republic of Georgia, 50% owned, placing you in a position for the junior mining company to self-fund exploration in the future. Is that correct?
Correct. Yes.
You're happy with that, yeah?
I definitely. Look, the project itself is quite big. We've got over 860 square kilometres of licence area. We already have a mining licence in place as well. Basically, our local partner owns and operates 2 producing copper gold mines in Georgia. The Madnuli mine, which is a significant open pit, it's been in operation for around 40 years, and Sukdrizi, which is again an open pit gold mine, predominantly a heap leach project, which was brought online about 18 months ago. Surrounding those 2 projects was a lot of exploration and development ground. Historically, the areas have had a lot of drilling undertaken, as far back as the 60s and 70s by the Soviets, and more recently, 2012 through to 2014, there was a significant amount of drilling on our 2 priority targets. So all of that historic drilling has basically put a C1, C2 Soviet resource on the overall project of close to 1 million tonnes of copper, 6.5 million ounces of gold, and over 20 million ounces of silver. So it's a big project. It's had a lot of drilling done on it, over 300,000 metres, I think, in total. There's been a lot of work done in country over the past couple of years by our local partner and his team. I guess where they started to identify some limitations was particularly relating to use of more Western techniques, looking at the development and near-term production assets with a bit more of an economic focus. A lot of the work that's been done over the last few years has been done by a very experienced team, but still sort of steeped in that Soviet-style exploration and mentality. It's not really looking at things from necessarily a commercial perspective. So our agreement is all of that exploration area was transferred into a new SPV, which we own 50% of. So we spent, I guess, the first 6 months getting hold of all that old data, reinterpreting it, remodelling it, putting into new computer packages to start producing some new models. We identified 2 priority targets, Sapeli and Bolnisi. Now, again, they're both areas that have had a lot of historic drilling undertaken on them. They both have significant C1, C2 Soviet resources. But more importantly, I guess for us, particularly for a short-term target, they both have what we've identified as being 2 starter pits, or 1 starter pit on each. Now, these on both of these sites, we've identified secondary quartzite mineralisation at surface, which basically gives us a walk-up mining target. Now, critical to being able to put that into production by H1 is the fact that our local partner has 2 operating mines within 10 kilometres of those 2 sites.
The infrastructure's all around.
The infrastructure's there. These 2 targets have had drilling undertaken on them. We're currently drilling at Bolnisi to finalise the resource drilling. The next step is moving it into production, which we're sort of targeting to happen by July, August of this year. So infrastructure is the key, though. The fact is these two targets are at surface. There's no stripping. They're high grade. They're reasonably modest in size. We think we've got around 100 to 150,000 tonnes at each of these, but running at a very good average grade of gold. And it is simply a walk up, dig it out, and we intend to sell the ore at the mine gate at our local partner's heap leach operation.
All right. How are you going to fund this and involve the retail investor watching this today?
We completed a fundraising about 2-3 weeks ago now. We raised £1 million. That was from a combination of new investors and existing shareholders. We believe that's sufficient funding now to get us through to production and cash flow. So the plan is to basically start producing our own cash flows and start funding the rest of our exploration work internally.
All right. Just to touch on the 4th of February RNS, you stated initial drill results at the potential for a H2 2016 first gold production. Obviously these questions are overlapping, I apologise. Can you explain in more depth to the viewer, please, what you mean by that? Is that definitely, that's a target you're going for?
That's the target we're going for. Again, using Bolnisi as an example, it's not a large area. As I said, we're looking at mineralisation that occurs at surface down to around 10 metres. So we're currently doing a 19-hole drill program. We're about halfway through that. The results have all been very, very good to date.
I was reading it out, that's actually, yeah.
Yeah, they've actually graded better than we've been using for our internal modelling. So we need to complete the last 10 drill holes. That will then allow us to put a resource on the ore body. And then it's just, the next step is just moving through to the production phase. We've got to do mine planning, we've got to do some pit design. But it is fast track, but given we've got no stripping and we're only potentially extracting down to around 5 to 10 metres, it's a very simple process. We're not building big pits here. It's not, there's no need to build any infrastructure. We've got roads. We'll simply be contract mining. We need a couple diggers, a couple trucks, and that's literally
it. So you could be cash generating then,
correct,
short term?
Correct. I mean, it's probably the simplest mining operation you could get. I mean, we've been comparing it to quarrying more than anything. The style of mineralisation is well known. They've been mining these secondary quartzites in the area for 40, 50 years. So the metallurgical work and the processing work is very limited. Our partner has an existing heap leach, which has been processing the same type of material through for, again, 20, 30 years. So the recovery rates are very well known. There's excess capacity on the pad. So again, it is as simple as digging it out. Now, we did look at the potential for doing toll treatment, but the problem with that is we'd have to wait the 3 to 6 months for the gold to start being extracted from the pad. It'd delay the generation of internal cash flows. It will cost us a little more on production, but heap leaching is a pretty straightforward process. I mean, there's plenty of these operations around the world. It keeps your cash burn
down as well, doesn't it?
Well, it does. Yeah, it does. And it means that we come to an agreed recovery rate, an agreed grade, and we basically sell it at the mine gate. So as soon as we sort of hand it over, that's when we go back and continue working on the next pit.
Right, you stated drilling will continue over the coming weeks and will be followed by pit design and mine planning. How confident are you of bringing this into production in the timescale you are working to? These are questions that are sent in.
Yeah, no, we're very confident. We've been very careful when we've been putting these timescales together. I mean, the worst scenario is you set a time frame for the market and then you don't deliver. So we've tried to be conservative. Yeah. Look, again, we're only drilling down to 10 metres, so this drill program isn't going to take a lot of time. The drilling should be finished in the coming weeks. The pit design, again, just reiterating, is simple. There are some additional planning processes we need to go through. We need to get licences for heavy equipment and blasting, but again, that's just a sort of a pretty straightforward procedure. That's used in engineering, industrial projects everywhere. So it's nothing nothing complicated. One point I should reiterate, I said we've got a mining license. Also, because of the area we're located in and because of how close we are to the existing mines, we're not at this stage required to do any additional environmental work because we're captured under the original EIAs that have been done.
Yeah, you're covered by that.
So again, that's another
plus, isn't it, really?
Yeah, it's another sort of.
So you must be quite excited about this.
No, we are. Look, we're very excited. Look,
it's very short term, isn't it? Really,
it is short term. It's simple. It's easy. We've got 2 targets. We've then got a 3rd copper target, which is quite interesting in its own right. That's at Bolnisi. As part of the overall, I mentioned when we started talking, we've got 1 million tonnes of copper, 6.5 million ounces of gold. As part of that larger picture, we're working on converting a lot of that Soviet resource to JORC. And we've got Mark Owen, who's the ex-technical director of Wardell Armstrong, is working on that at the moment. As part of that, we've taken all the existing core that we've been able to get from the historic drilling and reassaying it just to check the correlation with the new results we get with the old results, and if they do correlate well, it means he can place more reliance on the rest of those historic results. We came across some drilling that had been recently done at Bolnisi for gold. Now, because they were drilling for gold, they didn't assay for copper. So when we were doing our reassaying work, we not only assayed for gold, we assayed for copper, silver, and 40 other elements. And we've discovered a new, well, we think 2 to 3 new ore bodies in this region. I mean, some of the results from that, 40 metres at 2%, including 5 metres at 10, 83 metres at just under 1%. And these, again, are all very close to surface ore bodies.
Yeah,
so this again, copper, it's a well-known element in the region. At the Madnuli mine, they've been mining copper there for again 40-50 years. They have a float plant at the Madnuli mine that has a capacity of around 3 million tonnes per annum. They're only using approximately half of that capacity, and they're also feeding it with quite low-grade ore at this point. Now, the drill results we've seen at Bolnisi are indicating that we've got a significant resource there, probably averaging around 3% plus copper. So again, we've got the initial 2 gold targets, and then we've got a 3rd copper target, which again we can start extracting and feed it into our partner's existing plant. So again, no infrastructure required. So I mean, our next 12 months, we've basically got a timeline. We've got the Bolnisi gold pit. We've then got Sapeli with the 2nd gold starter pit. And then 3rd, we've got the new copper ore body at Bolnisi. So that should really get the company moving. We'll be generating cash flows, and it'll allow us, as that process is ongoing, to start focusing on some of the bigger targets that we've got at these licenses.
Because I look at the share price, you know, when you talk to companies and all this, it must be so frustrating for you guys.
Oh, it's
because you're doing what you're doing.
Yeah.
And you're sitting here now. Anyway, you're putting it on the table basically, aren't you?
Well, look,
there's always the share price, and you're like, you put an RNS out, and you're like, what's happening here? Why doesn't it move?
Yeah.
It must be so frustrating.
Yeah, it is. And look, when we raised this money recently, we got some good supportive shareholders in. A couple who followed the company from back in the early days in late 2010. A couple newer investors, but we tried to really focus on people who saw the vision, saw where we wanted to be, and we're going to follow it through, not just get an announcement out and have a quick sort of turn on their investment, to see us through this production and to see us through. I mean, we with what we have in Georgia, I mean, these 3 starter pits, if we include the copper. Look, I say they're small, but they have the potential in generating some serious revenues for us and some serious cash flow. But beyond that, we've got some amazing targets here, some big targets. The region is well known for its big ore bodies. You've got 2 at our partners' mines, Madnuli and Sapeli, already in operation. I mean, Madnuli's got another 30-40 year mine life, and it's been mined already for 30-40 years.
It's scary,
and we truly believe there's more of those in the area. So we get this cash flow going, we start funding things internally, and then we can focus on the bigger game plan.
The bigger picture.
But yeah, the share price is frustrating. But look, we've set ourselves now on a path. We are very confident that we're not going to have to raise money from the market again to get to where we want to be in the next 6 months.
Well, you know yourself, to the retail investor and the private investor, that's the big question, and that's the thing, is you know yourself, they look and think, right, are they going to dilute, are they going to raise again?
Yeah.
But if you say, but not in the next 6 months.
Well, look, I mean, we don't
cash.
have to build plant. I mean, you look at a lot of the near-term production stories that are in the market at the moment, and look, there may be a decent resource there, but most of them have still got to go out and spend 10 to 50 million on building a plant or infrastructure. Yeah, sure. And there's a lead time to that as well. And there's always other hiccups that come along the way. We don't have to do that. So a massive portion of the whole life cycle has just been taken out of the equation.
Right, another question. With significant Soviet resources already identified, which you've covered, by the previous owners, 2 gold starter pits have been identified. A 30-year mining permit in place, and the drilling and mining planning are underway. Things look good for the rest of the year for you guys.
Yes.
That basically covers what you just said, but you know what I mean?
It does.
It says what it says on the tin, so to speak. Yeah.
It does. And look, we've tried to take all the various aspects into account. As I said initially, we delayed putting out these sort of timings simply because we wanted to be certain we were going to be able to achieve them. And we've put a lot of, there's some fat in there as well. So if we do have slippage, if we have equipment breakdowns, if we, have problems, we're still very confident that we can meet those targets. I mean, hopefully we'll better them, but...
All right, you'll enjoy this next question. Can you comment on your turnaround strategy to the long-term holders? Your change of direction from the previous assets. Right, that's it, really.
Yeah. So, look, we spent 4 years working in Austria. We still believe that there's a lot of prospectivity in those assets. I mean, the issue we had there was, number one, weather. We could only work most of our projects 4 to 5 months of the year. So although it had been 4 years, you probably only had 18 months to 24 months of actual work time there. Yeah. We got some great results from the drilling. Although, I'll be honest, it is a more difficult jurisdiction to work in. Things take a little bit longer. And look, I in no way am saying that those assets don't have any value. And I mean, the benefit of Austria is we've got no carry costs there. So we can park those assets, we can sit on them for now. Look, gold prices has been improving over the last few weeks. If it continues to improve, definitely. We'll have another look at it. And look, if we can continue exploration in Austria from internally funded cash flows, all the better. But to be honest, on one hand, we have an asset that can be in production in 6 months. On the other hand, we've got some very good assets that need another 18 months of drilling. Yeah. And that drilling needs to be funded from somewhere. So we saw it as a no-brainer to focus on Georgia. Exactly. Yeah. We're in a good mining jurisdiction. We're in a mining area. I mean, the region that we're working in at the moment, approximately 80% of the local community are employed either in or ancillary to the mining sector. There's strong support from government. We've got a very good, supportive local partner. So again,
so there's no political issues anywhere, really, is there?
No, there's not.
Like you say, you've got the workforce all around you.
Yeah. And it's a very cheap environment to operate in as well. The exploration costs are significantly lower than a lot of other places. You sort of tend to find these projects in the world, and that carries over to the mining costs as well.
You're going to love this last question. Right. How can you attract new investors, and why should they invest in your company? And I always say this is LSE Share Talk, not the PR spin.
Sure.
So what can you, how are you going to get new investors?
I think you mentioned it yourself, the fact that the share price is what it is. Look, we've got a company fully funded through to production. We've got two low cost gold projects that we believe will be in production by the second half of this year, generating reasonably significant cash flows.
You said something there. Put some meat on the bones, won't it? That's for sure.
Well, it will. Look, and we will be in a position once we've completed this drilling and done the resource to start talking about the numbers. But until then, I'm not going to sort of throw numbers around until we've been able to sort of back them up internally. But
do you think you're a good investment, though? What I'm trying to say is, like, somebody who's watching this today and they're listening to your story. Obviously, we know the share price. I think it was at spot 10.
Yes, correct.
In the market, so
yeah, I think it's a very good investment. Look, I personally bought shares late last year at 0.16. All the directors participated in this placing we just had to date.
Well, that's good.
I think it presents a fantastic opportunity.
How much shares do the directors own of the company then? Would you say off the top of your head?
Oh, combined, I think it's around probably 3%, maybe a little bit more. Probably a bit more now, 3-4%.
Because that's usually a good, for investors. That's usually a good sign.
It used to be a lot more. I mean, I'll be honest, and I'm one of them. We all put a lot of money into the company, both in placings and buying on market back in 2011 and 12, when the share price was significantly higher than it was now. So I mean, a lot of the stock I bought was at 3-4p. So no, look, I understand frustrations for people who've been in the company for as long as that. But
for the new
investors, we've got a great asset. We've got short-term cash flows, and more than that, we've got a significant project here to follow that up from. I mean, these two starter pits, we think we'll mine them out in 3 to 6 months, because again, as I said, no stripping, very easy to mine. But alongside that, we've got some big projects, for your business sitting model, alongside it. So over the next 12 to 18 months, as we're working those 3 starter pits, we'll be getting the next resource ready to slot in once those are depleted.
Hopefully we can catch up again in the near future.
Definitely, no, we'd love to.
Cheers, Greg, mate.
No, thank you.
Thanks for your time. Cheers, thank you.